The first thing to do when you want to understand price movement using smart money concept, you need to understand what the structure. We have two forms of market structure: the market that is moving an uptrend and the market that is moving a downtrend, and then also the other one that is ranging. But I always trade the market that is moving in direction to understand what the smart money guys are doing. That is where I understand where liquidity is, because if I understand that the structure of the market is bearish and I see a retracement move up, I will either check if smart money are actually going there to run out the liquidity from the upside. Now there's something you need to take note of when dealing with smart money, to be observant of smart money guys. Now what I mean is, what I use in spotting out smart money is liquidity and area of liquidity, one, and two, the last institutional candle that run out money from the upside or to the downside, or from the downside to the upside. Those are the two factors I use majorly, and also market structure most importantly. The big bands, they understand the structure of the market. Now like we can see in this odd USD, the market structure is actually bearish. Market structure is actually what? Bearish. Now let me draw a trend line here for us to get clarity. Let me draw a rectangle for us to see what's happening here. So as you can see here, this market structure is actually bearish. Here, this area is an area of resistance where the structure was broken here, and the market pulled back to this zone here. So I'm going to be drawing my trend line from here. Okay, let me try something else. Sorry. So as you can see here, this market structure is broken here. So what I would say is this market is actually bearish in this zone here. So during this trend line, we're going to be understanding something here. So this market is definitely going to be reacting to the zone. So I'm expecting this price to actually move to this downside here. Let me see something here. And then a retracement move here. Now this is what I'm expecting to see, but it might not really happen. Because I wouldn't say this structure is clearly a downtrend. Because why I'm saying so is because of this. Because of this. Now until this last low has been taken, I cannot say this market is bearish. Now if you check what happened here, this was actually a rundown of liquidity. This was a rundown of liquidity here. So we're expecting price to actually react to the zone. This last low here has not been taken. It has not been taken. So that's what we're expecting smart money guys to do here. What this thing happened here was actually a total rundown of liquidity here. So there are areas that are used in spotting the market. One, the last institutional move that took price to the upside. Now this whole move here was to mitigate the position here. There were these sellers here, they actually were selling at this zone here. Smart money guys took out the money here. They took out the money from this zone. Sorry, check this out. Okay, we took out the money from this zone here. There were folks that were selling in this zone here, so this whole move to the upside was to actually mitigate their position. Now, I didn't mention this before. I talked about last institutional candle that took out money to the upside. Now, while I drew my trend line, I was pointing out major swing points. In case you don't know how to draw trend line, there's a particular video I released about trend line. I talked about trend line structure, trend line structure. So I'm going to be pointing something. Just stick close to this video to the end. There's something I need to clear out here for us. Sorry. Something I need to clear out for us here about trend line structure and advanced way of doing it. Okay, this was their position. Now if you check vividly well, you see that this was the last institutional candle that took price to the upside here, therefore giving us a resistance zone. So now smart money guys actually came back to this zone in the future to expect it. Now what I mean is they retraced back to that institutional or the institutional candle there. So what smart money guys are doing before dropping to the downside, so what they do is they respect last institutional candles. They respect that candles a lot, because why? They go to close out their drawdowns, their positions there, before running to what? To the downside. Now I made mention of run out of liquidity. Now if you check vividly well, you see something here. What I mean by they actually sell before they buy. What happened here? If you look closely, you see that there are a lot of orders here. So many persons here are buying. So many persons here at this zone, they will see this is a support zone. So what they do is that they start buying. And what will happen? Their stop losses are going to be here. The stop losses are going to be below here. And there's some. So when the market eventually went down, smart money guys stopped them out here. They run out the liquidity, because while they were entering here, their stop losses are here also. So smart money guys, they run out the money to the downside. So now this liquidity has been taken. Why there's another one here. There's some folks here that are seeing this as a resistance zone, saying that, whoa, I'm going to be buying, I'm going to be selling to the downside. These are early sellers. So what happened is their stop losses are going to be above here. So what happened? Smart money guys actually ran out with the money to the upside. Now I always say this: if you want to get involved in the chart, the first thing you want to do is understand the market structure. Now we know the market structure is bearish, so what we want to do is understand and wait for smart money to run out the liquidity. Now they've taken out the money to the downside, they've run out the liquidity to the downside, they've actually run out the liquidity to the upside. Now the next question you want to ask yourself is, what's the market flow? Now like we looked at the major initial trend of the market, you understand that the market structure is bearish. So what we want to do is look for an entry here and we'll right to the downside, because why? The market structure is bearish. They're going to be coming down to here. Now I'll tell you where I'm putting my target here. My target will be this last institutional candle. Now why am I putting my target here? If you look closely well, you see that this was the last institutional candle that took market to the downside, and price has been moving up ever since. So what they're going to be doing is price is going to be retracing first of all to this zone here. Let me take this out. To this zone here. To this zone here, and the next retracement move is going to be somewhere here. Sorry. Trend line is a little bit messy, but let's stick with me, please. Before we are expecting a move to the downside, let me see this trend line. Let's just keep it like that, so don't waste much time. But this is what we are expecting to see here. Now I'll tell you why. I'm expecting them. Don't forget, I said they took out money, they run out liquidity to the upside. Okay, the last institutional candle. Now if you look very well, this is the last institutional candle that took money to the upside. Let me zoom this a little bit closely so that we can get the picture. See, these are smart money, guys. So I'm expecting this to get down here, to get here. Sorry. Yeah. So the next entry trigger I'm expecting is this zone before riding price to the downside. Yeah. Now I don't forget what I said. This is an order block. Another block is actually where pending orders are. Where pending orders are. So this is what smart money guys do. They come after the last institutional candle after running out liquidity. They took out. Now if they want to go up, they're going to be selling first. If they want to go down, rather, if they want to sell to the downside, they're going to be selling first to stop out early buyers, go up and stop out early sellers also before what coming down. So what you want to be doing is making sure to see that smart money has actually run out the liquidity to the upside and to the downside first before looking for what an opportunity. Now, like I used to tell folks, you can never be late in the market because why? It takes time for smart money guys to run out liquidity. Now, how you're going to be identify them is another way is through the candles. Now, if you check at this candle momentum, they're actually big. They're actually big. Yes, you can see the volume of the candle mementos, they're actually big. Mostly this last one that took the price to the upside. This tells you that smart money guys actually get involved. Now some folks will be selling here. Immediately they see this what's it called? I'll call this an evening star. Maybe they see evening star they want to sell, but for me I actually wait for confirmation. Now I actually really like waiting for a retracement move back to that institutional order block, institutional candle that actually took price to the upside before getting involved to ride price to the downside. Now that's another one. So now like you can see, the most important thing, guy, don't get this twisted. Don't get this twisted. The most important thing is you want to understand what the market structure is all about. If you understand what the market structure is, getting involved in the chart to know what the price is doing is going to be very easy for you because why? You know what smart money is doing. Because we have a lot of investors in the market that actually entered the market earlier on before you. So what they're sticking to is the price movement. Price movement. Price movement. Okay, in case you have any question you want to ask us in this video, you can drop it in the comment section there, and also subscribe to this channel. See you in the next video.